So China is actually today, if you can give you the good news first, China is officially a 10 trillion economy. So the GDP growth is actually 7.4%, beats the expectation of 7.3. So it's actually not that bad, because the official growth target is, even though it's about 7.5%, but the Chinese premier actually caveated by saying that we want somewhere around about 7.5%. So in a way, China's economy actually delivered what the government expected, but just touched below the official growth benchmark.
So this, slight slowdown has been anticipated for some time. Do you think that's important here, that people aren't getting caught out?
Yeah, at the moment, it's the slowdown has been happening for quite some times now. There's no dramatic collapse of the Chinese economy. A lot of the people were actually saying about China will experience a Lehman Brothers type of a collapse at the beginning of the year, then gradually the risk would spread to real estate sector. There were all that in China, all this kind of risk, but it seems to be Beijing managed somehow to stabilize the economy during the 2014. So yeah, so there's no dramatic collapse. And there's going to be continuous worry about the Chinese economy, but it's not going to collapse.
Right, so on a purely selfish level, as I sit in a studio in Melbourne, what does this mean for me?
So basically there will be a continuous pressure on the commodities price. So basically Macquarie today, the latest research report says the iron ore price will continue to experience a downward pressure, which is the largest export earner for Australia. So we can perhaps expect a further deterioration in the in Australian export performance, especially for the commodity prices, because the Chinese economy is probably the single largest driving force for the demand for Australian commodities, and the price we have seen has been in continued decline. Just oil, copper, iron ore, and all that. So I think the continuous slowdown in China is probably not the best news for shareholders in BHP and Rio.
And what about foreign investment in Australia? Is this going to have any flow-on effect there?
Actually, the foreign investment is expected to ramp up in Australia, because a lot of a Chinese company actually, as a part of either of a risk diversification, you see a lot of insurance companies are actually looking for assets to invest in Australia, and the big property developers like Wanda is actually the largest property developer in China. They are seeing a slowdown in the commercial property sector in China. They are seeing a slowdown in the real estate sector in China. Now you're actually seeing a huge push by the Chinese developers to acquire assets overseas. So in this way, you're probably going to see a lot more Chinese investors, especially the property developers, actually are going to invest a lot more in Australia as a part of their strategy to diversify their risk.
Right, now you've been preaching some kind of moderation in reacting to the China slowdown for some time. I mean, do you think we need to be realistic about this, and the fact that 7.5% or 7.4% growth is still great? Yeah,
it's actually, it's because we're so used to China growing at a double digit, so 7.4% sounds terrible, but mathematically speaking, China's economy is actually much, much larger than before. So only a couple of years ago, it was actually 8 billion. Now it's like, just grew another size of an Australia, essentially. Even China's last Q3 GDP revision itself, a small minor revision, turned out to be larger than Malaysian economy. So we might worry about the growth rate, but in fact, mathematically speaking, the Chinese GDP is just getting larger and larger. So it's actually not too much to worry about. I think the big thing about the Chinese economy is basically it's slowing down at the moment. It needs to implement structural reform, basically to free up the financial sector, to give more funding to small and medium-sized companies, all that. So the China's long-term growth is really dependent on the structural reform. It seems to be government at the moment to try to strike a delicate balance between maintaining the kind of reasonable pace of growth and also at the same time try to implement a structural reform. It is a very difficult juggling act. But it seems to be so far they are just muddling through for another year.
And you're, optimistic that they can muddle on through 2015?
Yes, 2015 it seems that China will be able to muddle through for another year. But this year, because last year was so-called a year zero for reform implementation, and this year will be, quite interesting to see how how forcefully Beijing wants to implement its very ambitious structural reform program. So, and also at the same time watching very closely what the central bank is going to do, whether the central bank would cut the interest rate or lower the reserve ratio to stimulate the economy. So there'll be a lot of things to watch out for in 2015.
Terrific. Peter, thanks very much.
Thank you.